Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August, the heck. Welcome to the September 3rd wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes. Boy, we'll talk about a brain fart there, huh? I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there is off to a great start of their day. Let's just make sure that you and I, that we do everything that we can to have an extraordinary and wonderful Wednesday. Now, for the next hour, I'll share with you extraordinary tools that help us identify where the markets are headed. It doesn't matter what time frame it is that we trade, we can utilize these tools, whether they're the lightning bolt pattern, that A to B equals CD, whether it's a Fibonacci expansion and retracement, could be TAS market profiles, could be the Chapman wave trough and the peak counter out there, could be the Rhodes momentum trading signals. We'll use whatever tools we can to help us identify what the bulls and the bears are doing. That includes the Japanese candlesticks, because the bulls and bears leave signs for you and I each and every day. So it's an interactive show, and welcome to all our new listeners out there. Remember, we kick things off here at TFN. Hotel California is what we affectionately call it, at 8 a.m. Our man John Logan kicks things off. We run till 6 p.m. And as the markets are changing, our views will change out there as well. Now, it's a dynamic show in that it's a call-in talk show. That means we'd love to hear from you. That means you just got to overcome that little hurdle of, do I call in or not, the nerves. And I understand those bundle of nerves, even myself, when I call into a radio talk show. And that's good, right? You know, it's kind of interesting out here. If you talk to two different people, it's interesting. If you talk to two different individuals, ask them, if you ask somebody, what does it feel like what does it feel like? What do you like a Dave Letterman or somebody, comes on the air, not a Steve Rhodes. What does it feel like every time, you step on stage? Could be a performer. And what they will tell you is they will say, and you ask them, hey, is there any apprehension or what have you? Or does it just simply get so routine that, that there's nothing to think about? The reality is, and this applies to trading as well, because think about it like this, is price, if you see that you want to buy something and you're waiting for it to pull back, right? Are you the type of person that when it's pulling back, you're licking your chops, or your hands getting all sweaty? Is your heart starting to beat a little bit faster, and you're wondering, should you pull that trade or not? Well, it's to say, if you talk to a what I'll call professional, that you might admire, look up to, that is performing, what you'll find from them is that the same things happen before they're about to step out on stage. Their heart starts beating a little bit faster, their palms start getting a little bit sweatier, and then, boom, once they're out there, they take their action, they take massive action, and they're ready to go. And it propels them forward. It propels them to be able to take that action. If you talk to somebody who's got fear and stops them from taking action, guess what? They'll tell you it's the exact same thing. You say, what stops me from taking action? Well, my heart starts racing faster, my palms start getting sweatier, what have you, and instead they'll utilize that to stop them from actually taking action. It's a small little nuance. It's like 2 millimeters, but it is the difference. And when it comes to trading and investing, it is that 2 millimeter difference that makes all the difference in the world. So, look, folks, as long as you use stops out there, plan your trade, understand that that all people, whether it's somebody that is successful that's getting ready to take that next step to propel them forward, or that person of fear, that's really the same formula. It's the same combination. So just let that fear guy go to the side and just simply go ahead and take off and propel yourself. In any event, I was just speaking about the fear of calling in to any kind of a show out there. So if your heart starts beating a little faster, it's supposed to. But look, our phone number is 877-927-6648. Internationally, it's, what is it? It's 727-445-1044. Would love to hear from you. This is Steve Rhodes. It's a wonderful Wednesday. And let's go check out the markets. Right now, we've got the Dow up 72 points, trading out at 17,139. S&P up about 5, trading at 2,007. NASDAQ composite out here. We're going to focus in on the NASDAQ, see if we can get a feel for what's happening out here. It's only up $2. So why is the NASDAQ taking a back seat out here? Russell 2000 up 3 points, up about 0.25%. NDX 100 down 2 points out here. New York Stock Exchange up 52. Net advancing issues this morning. Let's take a look at that. We've got 894. So advancers leading decliners by about 2 to 1. So market breadth still pretty good there. I don't recall the number off the top of my head. I'll look at it during the break, a number that we certainly want to monitor inside of the net advancing / declining issues out there. The VIX index is trading lower this morning. It's traded out at 1205. I believe 1277 is the number. That's that 50-day exponential moving average that we would want to keep our eyes on. So let's go take a look at the NASDAQ out here. Let's take a look at it on a daily chart, get a feel for what's going on out here. Inside the NASDAQ, trading above its market profile high. That's a old resistance area. Should become support. That's priced out at 4,078 out here. Peak-wise, it's in the third peak, that peak C out here. That suggests that we still have, if you follow Basil's system, that you're going to get anywhere between 4 to 7 peaks. So we've still got that. That couldn't occur. Today's Wednesday, down day. Couldn't really occur and confirm until Monday out there. If we take a look at the so that's on the daily chart. So this is still in full-blown bullish mode out here. In fact, there was a little shooting star candle that took place out here. That should also be support. I think this lines up, quite frankly, with the market profile high. I'm referring to the August 25th high, which is 4,078.50. How about that? Lines up exactly with it. So there's your bear. So you got a market profile high. You've got a bearish reversal signal, a shooting star, old resistance, should become new support. 4,078.50 should be a pretty significant support area. Hey, if that level gets broken, what's that mean? It doesn't mean that the game is over out here. If you were to see a close below the open of yesterday, well, maybe a little bit different story. This is the futures contract that we're looking at. That open was 4,078.75. You'd have your first bearish reversal candle. Well, you'd have your second. How can I say first? We just talked about the shooting star. You'd have your second bearish reversal candle out here. You'd really need to see a close below that market profile of 4,053. That is the daily chart for the NQ. So nothing looking too badly there. We're going to go from daily to the 5-hour energy drink chart out here to the 120 to the 30-minute. We'll see what it is that we can find out here. Now, one of the topping type patterns that are out here. Let me just reload this, make sure I've got everything that is currently updated out here. Is a price relative strength divergent pattern. That's where price moves higher on less relative strength. We do not have that in play as we speak right now. Now on the 300-minute chart, on the 500-minute chart, it did make one of those fourth peaks out here this morning. That was coming into the 9 a.m. session. Here on the 5-hour chart, we've got the bearish engulfing bear sash candle out here. But its market profile resistance level looks like about 4,079.70. So you need to see it close below that to start to maybe get your skirt to blow up. If anything, it looks like that becomes the next area, the next jet propulsion area for the takeoff zone for the NQ. If you take a look at what the daily is communicating to us, what the 5-hour chart, what the intraday charts are saying, hey, it's preparing for a buying opportunity here, and that best buying opportunity on this 5-hour chart takes you to the 4,079 type level out there. That's as we speak right now. Yes, you got a bearish reversal signal and candle. It would have more meaning to me if price was moving up on less relative strength, but that is not what we had in place. That doesn't mean that the markets can't fall apart. If we take a look at the 120-minute chart out here, actually the NQ is doing exactly what it's supposed to do. What do I mean by that? Well, on the 2-hour chart, that's what we're looking at right now, you're taking a look at an A to B equals CD pattern that it completed this morning to the upside. Your A point on this is going to be the swing low here from 8 a.m. That was on August the 28th. That price is at 4,054.50. That's your A point. Your B point was that first move up into the 4 a.m. session. 2-hour chart that we're looking at, that's August 29th. That's at 4,086. Makes a retracement. Looks to me like about a 0.618 retracement or so. And that's down into the swing at 12 noon on the trading session of August 29th. The 1-to-1 A to B equals CD, that projection was 4,093. Gets up there, pulls back where? Into the market profile low, continues to move higher, moves up this morning with a widest ranging bar. Now it gave up some of those gains as it hit that during the 6 a.m. session out there. Nonetheless, 1 to 1.618, A to B equals CD, as well as getting to a fifth peak out here in the Chapman wave that came in at 4,113 to round it off. It actually got up to a price point out here of 4,113 to round it off. And now what we're seeing here is a bit of a move lower. We see that there's a new market profile that looks like it has established itself here recently. I would be paying more attention to this wider box, this more established box out here, and would say about 4,083 would be the number to be paying attention to inside of the NASDAQ out here. That doesn't mean that 4,092 is not the good support level. That's the current box. So 4,084-ish to 4,092 on the 120-minute chart out here. Again, we're picking apart the NASDAQ to get a feel for what it's doing, simply because it is the strong dog out here, and we want to see, is a strong dog doing anything unusual in the marketplace. And so far, I'd say it's actually doing what it should do, right? If you have the art of timing the trade, which you should, that is something that you should have in your library out there. You'll know that when you do a 1 to 1.618 A to B equals CD, you are more times than not, I don't know what percentage that is. I just know that it's a big percentage. You are more times than not going to do something different. When you do a 1 to 2 A to B equals CD, because things are so stretched, you're likely to totally change course. But 1 to 1.618, hey, sideways, retracement, pull back. And so right now, we're just using all the tools that we've got in our bag out here in order to evaluate what's going on inside the market out here. Now, let's actually take a look at what's going on the 30-minute chart out here. Let's go ahead and do some new peak counting out here. Let's start from this low that came in at 130 on yesterday. Was it yesterday? Oh, come on, don't do that to me. That came in at 9.2. That was yesterday morning out here. Okay, so on the 30-minute chart, gets up to a fifth peak. Now, it's pulled back below its, so this is going to be important to watch inside of the 30-minute chart out here. The reason I say that, we've got two market profiles out here that we're going to pay attention to. Let me actually do a countdown as well on this 30-minute chart out here. That's only it that's made that A level. Let's take a look at, so you got a market profile. The question is 4,097 going to act as a resistance area? That's the market profile that came out on a 30-minute chart here. Come on, stop doing that. Came out here at about, oh, Lordy. Right about the time frame of about 5 o'clock this morning, 5:30 this morning. Again, we'll really want to pay attention to this longer established profile in the 4,083 level. But the 30-minute chart here, let me take a look at some retracement areas. Give me a moment. We'll put up the retracement tool off of that low that came in yesterday. This will take me just a moment to set this up here. Get that property going, default it. There we go. Take a look at it. So a retracement now. So the pullback this morning on the 30-minute chart out here, it's made a 0.618 retracement. Here's the problem. On this last 30-minute bar that we're looking at, a wide-ranging bar coming in the 0.68 retracement. This says to me that what we really ought to see out here is more likely a pullback to 4,085. That's your 0.786 retracement inside of the NQ on its 30-minute chart out there. Right now, we got the Dow up 67, S&P up 4. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 50 points right now. S&P is up 3. NASDAQ is off 4. So, as we were taking a look at during that first segment, the real key here, for me, the real key is there's several of them. So the real keys is really what I should say, right? The key is going to be watching the NASDAQ. Now, it's doing what it should do. And that's really what I wanted to point out as we took a look at different patterns out there. It's doing what it should do with regard to backing off. So let's not get too emotional about it. Now, that doesn't mean that and the selling is just likely going to come out of nowhere out here. So it's something that we want to be paying attention to if there is some selling. When it does come, it'll come out of nowhere, right? And it will be pretty relentless. What we want to pay attention to, is what's going on in the laggards, what's going on in the leaders. The very first hour, I shared with you a very in-depth analysis, in my opinion. It was take a look at the Russell 2000. So if you didn't catch the first hour, go check the archive out on Channel 9 or download it on iTunes or all the many ways that we have it available to you here at TFNN. And because I think it's also important for us to take a look at the Russell 2000 with regard to any kind of breakout or breakdown out here. Now, inside, the other things that we want to be paying attention to, New York Stock Exchange. So if we take a look at the New York Stock Exchange out here, it probably has now tested its July 3rd swing point. So that's going to be important. So now it's made 100% movable move. Let me pull up the New York Stock Exchange out here. Let's put that on my screen. And if we take a look at, don't pay attention to market profiles. I don't think that these are actual for the index. I need to talk to John about that. So we have not tested the swing point high, but you're trading inside it. So July 3rd swing point on the New York Stock Exchange goes from a low of 11,069.72. You're trading at 11,081. Now, if it were to trade and close underneath 11,069.72 today, you could potentially have a rejection of that swing point. I'm imagining we're going to have it on lighter volume, but I could be wrong. I won't really know till 4 o'clock, right? But if you see it close below 11,069.72, you'd have a rejection of the swing point, period. Now, if it's on lighter volume, you would then have all the work to the upside that was done. You'd have a 100% move of a move. I know I can get it out. The real key inside the New York Stock Exchange then would come if we were to see a rejection of that swing point is what would be the net, assuming there would be net decline in issues. If there's no net decline in issues, it's telling us that the high is going to be tested, 11,105.85 out there. If we saw 1,420 or more net declining issues, that's a different story. Then I would say that the work to the upside inside the market, inside the New York Stock Exchange, the wider swath of the market would be done. What do I mean by that? If we just come back over here and take a look at the summation index, at that stage we would see this little green line. That's your summation. That's your trend-based tool out here. We would actually see it tick down. Now, could it tick down for a day and then pop back up? Sure, it's done that a couple of different times here along the way, but it's a really important, really good trend to be paying attention to and to be watching out there. You would also see the price oscillator that would dip below the zero line. That would turn the summation index down out here. And that's a possibility, so we have to open ourselves up to paying attention to that. Another thing that we would then likely see out here would be the VIX index. If I just put down, why do that? Let me do this here. It's just going to be easier. I had a VIX chart, but the system shut down and it didn't save it. So I'll just rebuild that. If we take a look at the VIX index out here, the key is going to be my opinion, is the 50-day exponential moving average line. That is at right now 1274, 1277, 1279. Let's just call it 1280. You need to see it close above 1280 today. So in conjunction with the New York Stock Exchange making 100% move, rejecting that area, in conjunction with seeing net decline in issues of 1,420 or more, in conjunction with seeing the VIX index trade, let's say 1280, above the 50-day exponential moving average, then we might really have something out there for all of the bears, because the message from the markets would be careful, because it has all the ingredients that would be needed in order to see the market then begin to reverse and do something else. Could it be a move sideways? It could be all types of things out here. If we take a look at go back to the New York Stock Exchange chart here just for a moment. I know I'm switching around here. What is interesting, if we see price stop here, then you've got a consolidation pattern inside the NYSE. And that consolidation pattern, in essence, beginning, really, I'm just going to use the candle. It would have begun really on May the 20th. I'm going to use May 21st candle out here, because that would be the bottom of the consolidation, the top of the consolidation being July 3rd out there. And if that's the case, if you can't bust them up, what does Tommy like to say? You like to go bust them down. So those are the elements that we want to be watching today inside of the overall market. Dow's up 52, S&P's up 3. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 57. S&P's up 3. NASDAQ Composite off 5. The NDX 100 struggling out here. It's off 10. Let's go check in on a few stocks out here. So you got Apple. I don't have my listing. I assume Apple is still the number one weighting structure inside of the S&P 5, inside of the S&P, inside of the NDX 100 out there. So that's not moving on my other system here. So let me just come over here. At one time, I had them all listed. Let me see here. Wonder if this is them here. Citigroup, General Motors, Gilead. No, that's certainly not it. So I'm not sure what list that was. But let's go take a look at Apple. APL is a ticker symbol. Let's go see what it is. So Apple, leading the charge on. So putting some pain certainly into the NDX 100, no question about it, is Apple today. Let's see if there's some volume here off of the high. So take a look at Apple. You got a bearish separating line candle. It's a bearish reversal signal for sure. Volume so far, 40 million shares already. We've only been trading for an hour out here. So Apple feeling the heat out here to the downside. Now, it doesn't break a market profile until 99.52. So far, intra-session low is 99.90 out here. Apple doesn't break a swing point until it gets all the way back to the August 8th level, 41 million shares there. So you can see pretty big volume, pretty massive volume trading hands inside of Apple as we speak out here. And that is what is, I don't know if that's the only thing putting that pressure. We'll go take a look at a couple of them. But that certainly is what's putting the pressure inside of the NDX 100, inside of the composite out here. But at this stage, you got volume off the highs. No question about it. So we'll continue to watch Apple. Let's go take a look at Google, G-O-G. Let's go see what Google is doing out here. From a daily chart, no big deal on Google. In fact, if anything, Google just gave you a little bullish, potential bullish sign. Well, maybe potential. It's broken today above its market profile high out here. That's at 577.82, so it's held that line. If it can hold that line, that's more bullish than bearish. It's trading into a swing point from August 19th, 979,000 shares, so it's pushing up to that swing point with volume. 427,000 shares today, so that is pushing higher. Inside of the NQ. Somebody else out there in the den, as I don't have my list in front of me, and I give me some of the other top 10 holdings inside the NQ out there, if you would, if you've got them handy. You're going to have. Golly, it's like a total brain contusion and fart out here. Cisco might be a part of it. CSCO, is that? I don't think that's even the ticker. Yeah, it is CSCO. So let's go see what it is doing out here. I could be wrong about this. If we take a look at this, Cisco, it's moving higher today. Volume behind the move, 6.6 million shares out here. It's trading into a swing point that's got 25 million shares. So Cisco's got, thank you, Basil. I appreciate that. Nothing like having support all over the place for us here at Tigers. Microsoft, another one. Let's go take Microsoft. Boy, I was looking at this chart over the weekend. What a strong-looking chart Microsoft is. Now, Microsoft traded lower initially this morning, running into support of its market profile, 44.44. It actually got down to 44.53 out here, but talk about strength. It's got volume up at the high that has not been tested. Microsoft ought to get up and at least test that 45.71 mark out here. That's the trading session from July 17th. So that looks pretty good. Intel, again, thank you, Basil, for that. INTC, that is trading at 34.70. Intel had one heck of a sign of strength back here on July 16th. It came back and never filled the gap. It came back into that sign of strength with some light volume out here. The current swing point that it's dealing with looks like from August 22nd, 21 million shares. It's pushing in there with volume, 7 million shares today. This is pushing highs with volume. It is rejecting the market profile high out here. So that is inside of Intel. Gilead, now there's a stock that's absolutely on fire, huh? Take a look. This thing is just nothing more than an absolute rocket ship out here. Again, moved higher today. It's very difficult to find anything bearish about Gilead. The only thing that you could find bearish about Gilead was it had a key reversal session on August 26th out there, and it rejected that area it rejected it yesterday. That key reversal session, a little dark cloud cover, but I was more interested in the mere fact that the high was taken out from August the 25th out here, both the high and the low, and it did have a lower close, and it certainly was in the overbought range of its relative strength indicator at that stage up at the 80 type level out here. But in trying to figure out where Gilead's going to head to, this is one of those stocks where pretty tough. I think my best friend owns this, and he was asking for some advice on a number of his holdings as to where they might be headed to. And I remember doing the A to B equals CD on this, because the only A to B equals CD pattern that I could come up with was off of the monthly chart out here. And that A to B equals CD pattern, the A point's all the way back down here in the August of 2010 time frame, your B point, because there hasn't been a retracement, is up here. The B point is up in February 2014. And then when we saw this entire sector kind of get crushed out here, that's when we also saw Gilead pull back right into this is a monthly chart, right into a market profile low out there and held. So this says $132, but I told him that the way this chart pattern looks, it's not 132, it's more like 151 is what Gilead may have in store for us. So Gilead is the what was the stock back in the 70s? The high-tech pharma company back there. Oh, geez. I can't believe Gentech. Gentech. What is Gentech? It's Gene, I think is the name, right? That was a cool symbol, Gene. Let's go Genentech out here. It looks like Gilead is the Genentech. How about this? So, geez Louise, this genetic. No, it's not Gene. What is Genentech's symbol out there? Anyways, I was just curious. I haven't looked at Genentech in what seems like forever. Let me take a look at Facebook. Let me put Facebook up on. It's not Gene, that's for sure, Gene. But let me take a look at Facebook. I thought it was in any event. Doesn't matter what I thought. We know that is not the case out there. In any event, let's take a look here at Facebook. I'll stop rambling. Although Genentech bought by Roche. Oh, thanks, Z. Appreciate it. So no wonder I can't take a look at it. But boy, that was one of those great stock charts as well. But if we take a look at Facebook out here, a huge sign of strength out here that it is now testing and up and over here today. Looks like maybe it might have got over yesterday. The high 76.74 out here, and that had volume of 124 million shares. It was the swing point. It was tested yesterday, got up to 76.70. So it did not test it yesterday. The volume coming into it yesterday was 34 million shares. That was versus that high of 124. So it doesn't look like Facebook is necessarily going to confirm an A to B equals CD to the upside out here. Maybe Facebook just simply is going to consolidate a bit further out here. But the stock chart itself is looking pretty good. Now, what you want to watch for in Facebook, if it can take out that swing point with volume, I'm referring to that trading session from July 24th. It sets up a big, huge A to B equals CD to the upside. But it doesn't look like today necessarily is the day. 13 million shares versus 124. Nah, we need to be way too much volume would have to come in on this equity. I don't see that taking place out there. In any event, so we took a look at many of the top holdings. I think I got to them all. I didn't do Amazon. Let me take a look at Amazon. So many of the top 10 holdings with inside the NASDAQ, and it's only Apple. Kind of reminds me of it's only July 31st that was really the down session in July that turned July into a horrible-looking bunch of stock patterns in the weekly and the monthly out there. If I do take a look at Amazon, Amazon is just trying to fill its gap out here. It's doing a pretty good job. It needs to get up into the July 24th candle session in the 358 level. It's trading right now at about 339 out here. Volume has been relatively light in comparison to that big, huge downdraft. So in the case of Amazon, no wonder, Al says that DNA, that's what it was. It was DNA was the ticker symbol for Genentech out there. Thank you for that, Al. And so it's all the way back in March of 2009 when they were bought out. Geez, no wonder I haven't looked at the stock chart in what seems like forever. That would be forever in my book. I had a request to go take a look at 3D Systems out here, Triple D. Let's go take a look and see what 3D Systems is doing right now. It's trading out at 52.70. The question is this a short? And if you take a look at 3D Systems, one of the things I would be concerned about is this high volume bar in 3D Systems on July 1st, 20 million shares to the upside. Let me pull this back further, see what that was doing at that stage out here. That's one thing to be concerned about inside of 3D Systems. Now, the chart itself does not look that good. If you were going to short it, you would use as a stop at close about 54.24. That's what I would do. What this hasn't done, it got back to. So if I'm going to take a couple of things off the chart out here, give me a moment. Let's come over and remove a couple of tools so we can see exactly what it was doing out here. And if we take, so this is kind of a confusing stock. Looks like 3D Systems is a bit confused out here. If we take a look at it, it had a downdraft recently back, start July 31st. Okay, so when the market had a downdraft, 3D Systems, so that's kind of interesting. 3D Systems participated with that downdraft. And it moved down with 13 million shares. So price got very close to that area where it broke down from. Oftentimes, if we take a look at, do you want to buy a breakout or do you want to sell a breakdown? Then yes, J&J, this would be one of those that you would take a look at selling a breakdown because in essence it got back to that level. You would preferred it to have tested 54.71. It did not do that. It got up to 54.24. Nonetheless, if you've been looking at this, now here's the thing, when you're taking a look at any kind of equity and the reward risk on it, your initial target ought to be the swing point, that 100% move of a move. So I don't know that this really sets up for you, as if we take a look at the daily chart, as being enough. And that being enough meaning that swing point is August 5th, and that price point is 46 to 47. You're at 52 right now. And you'd have to wait for a close above, I think I gave it was probably around the $55 level. Now, you could see a ultimate move down to this high volume bar, so I understand what's being looked at out here, which is the April 29th area. So you'd have two targets if you were to short an equity like this. 43.35 to 47.50 is probably the range that you would be looking for to get out of this equity. Now, if I put this on a weekly time frame, which I'm going to do, see if there's anything else that shows up on the chart out here. The weekly time frame, what is this showing us out here? Good question. Just trying to look at it. In the weekly time frame, what it's dealing with is this high volume weekly. So we took a look at that day. The week was, I don't remember the day, it was during the week of April 28, 2014, 35 million shares down there. Now, that was tested with 16 million shares recently. So it doesn't seem like this has a ton of momentum to the downside out here. We're looking at 3D systems. I'm looking for someplace back here, like a breakout area. You know, if it breaks that swing point, I would say from April 28th, then it probably pulls back into the swing point from March of 2013. So I hope that assists J&J in our Tiger's Den with 3D systems. There may be better equities to take a look at from a short. I would also suggest waiting until the market gives us some kind of a short signal out there. And I provided a couple of different indicators that would help you with that. One of those being the VIX index, getting above the 50-day, net decline in issues inside the New York Stock Exchange. Those two things alone would help out to then at least get the market moving in your direction out there. So that was on 3D systems out here. Let's go see what's going on inside of some of the sectors inside the S&P 500 out here. So as we look at these, and I got to add the utilities back in here, I've got 8 of the 9 sectors. Inside of the number 1 sector, the technology sector, XLK, it's Apple down $3, trading off about 2 7/10% Apple. I'm sorry, Microsoft down 12 cents. That's no big deal. But the rest of them to the upside out here. In the financial sector, everything looks pretty good there. Bank of America's back 4 pennies, not a big deal. AIG, which is struggling, we looked at that yesterday, is back 7 cents out here, so that looks okay. Speaking of J&J, let's go look at J&J. Let's go look at Johnson & Johnson. That's up 64 cents, up 0.6%. That is the number one, I believe that's number one weighting inside of the healthcare sector, the XLV, which is a strong-looking sector. Let's go see what Johnson & Johnson is doing out here. Right now, it's trading into a B point, a potential B point of an A to B equals CD to the upside. That's the August 21st trading session. 8 million shares up there. So far, it's traded 900,000 shares, so it doesn't have enough volume here today to really take that out. It has been struggling with its downdraft session from July 15th out there. The top of that level is 105.47. I suspect that that's where it wants to get to. It did today clear its resistance level of its market profile. That's at 103.70. So staying above 103.70 would be pretty bullish for Johnson & Johnson. Right now, we've got the Dow's up 60 points. The S&P is up 4. A composite, again, a weak link out here, off about $3. Mostly led by Apple to the downside. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. It is good to live with passion, isn't it? Right now, we've got the Dow up 62. There's some passion inside the belly of the Dow, but it's struggling to get up over resistance out here. I was just checking in on the daily market profiles in the futures contract, and it's just struggling to get up and over that level. The S&P's up 4 points. That's straight out of 2006. The NDX, NASDAQ, and NDX, they are the struggling indices out here. And, you know, and it's primarily, as we took a look at the top 10 holdings, primarily Apple that is having the influence on price out there. So I don't think it's just one stock that's going to crater the market here. Gold is up $3. We covered gold earlier. Wide-ranging bar to the downside yesterday. Markets don't typically end on wide-ranging bars, meaning reversals that take place the very next day. Out here, I do believe that gold and silver specifically are trying to form a bottom out here, but we may see some lower price. In one of the segments, as we took a look at the NQ to get a feel for what might be going on, I mentioned the 0.786 retracement level. We did that on this 30-minute chart out here, and that area has now been hit. That was attained. That price area was right around the 4,800 4,086 area. We actually saw a move down into 4,084.25, and we have not seen a test of the swing point out here. This is a 30-minute chart that we're looking at. It's the swing point from 1:30 yesterday afternoon out there, 4,083. And so maybe we'll see a test, an intraday spike of that level. I would say this to you: if we see on a 30-minute chart, because it formed. Let me just update this here. Let me just reload this, make sure that everything is okay. Maybe reloading it was. There we go. Yeah, okay, so we're in good shape out here. If we see what I've noticed in this, especially in let me just say this. If you see it close above the candle session here that took place at 10:30, that happens to be a Rhodes momentum candle. And if you see it close above the high, 4,096.50 out there, that will take the 30-minute chart into its next buy mode out there and suggest that we move back up to the highs, maybe even take them out. And if we don't see that, then maybe we're going to see as a test of that swing point low from 1:30 yesterday afternoon. But that is really the only weak area in the markets that I can see. Net advancing issues are still okay. You're about 533. You're not 2 to 1 any longer, but you're about 1.5 to 1 out there. So that still looks pretty good. And that's that. What did we not really look at today? We might not have gotten a chance to really get to the currency market. I'll leave that. Maybe Basil will cover that. If I take a look at some things here really popping and dropping just as we close out the hour, looks like Helen of Troy out there. HELE is the ticker symbol. That has a gap down with some pretty big volume out here. Looks like they generated revenues. Forget their revenues. I don't see them handily on my screen here, but getting below a swing point. Helen of Troy not looking very good out here. Right now, that's all this thing has done is really break swing points to the downside, and you've got big volume today to the downside. So far, 422,000. That's pretty big volume for this equity. It looks like that's going to trade all the way back, make a 100% move is probably what this thing is doing out here. That's dangerous. Helen of Troy eventually probably wanting to get back to about the $40 area, trading right now at 52.55 out here. Hey, I haven't done an in-depth study on it, so don't be going and shorting Helen of Troy out here, but it does not look very good. Folks, it is Wonderful Wednesday. It means we got a great lineup for you. My man Basil Chapman, he's up the next. Following Basil, Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. And thanks so much for joining us here, folks. Have a great Wednesday. I look forward to seeing you tomorrow morning.
Heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.